What is up, everybody? Steve here. The real estate market is shifting, and a lot of the big boys, the institutional investors, are pulling back now, which is only going to cause more real estate inventory to go to market. It's going to allow buyers who are in the market right now more opportunity, more properties to take a look at. Now, let's jump over to the earnings call that they had for American Homes for Rent. They have about 50,000 homes that they own and rent out in about 22 states. Their earning calls last week, which I'll, of course, link all these for you as well. It came from Wolf Street, and then I have another article I want to talk about as well. But the earning calls said that it is slash purchases of single-family homes by 80%. And now it's pretty open in terms of when they state that they're going to come back into the market more aggressively, but they stated this is to allow the market time to recalibrate and to stabilize. It goes on to say the pricing we are seeing today is March pricing, and that needs to be adjusted. Rates are going up, prices are going down. It takes time. Seeing inventory expand, length of time to sell, meaning it's taking longer to sell their homes, is expanding. New home inventory is increasing. And the CEO goes on to say we need to be patient and allow the market time to reset. And then he goes on lastly to say it's all about the fact that the capital cost for us as well as individuals, so individual home buyers is obviously seeing, mortgage rates, things are becoming less affordable, and it has to get reflected in the marketplace. So those are very strong words coming from one of the largest institutional investors, but basically stating that, if property values do not come down to a normalized rate and it's just unaffordable for individual owners as well as institutional investors to make a profit on, a good return when they're renting these properties out, that they're just going to not purchase until these prices start to come down. And obviously we're seeing a tremendous amount of price decreases. And as I've been saying, I believe in the fall, in many markets, we're going to start to see the actual values from sold comparables from months prior. We're going to see the actual sold comparables decrease in fall. One other thing that I want to tackle here, it goes on to say this article from Bloomberg, and I'll leave it in the description as well. It's not just America's Homes for Rent either. There's other larger institutional investors that are doing the same thing, as high as 50, cutting purchases as high as 50%. Some of the largest U.S. landlords have pulled back on purchases of single-family rental homes as rising financing costs and high income prices cast a cloud over the once hot, sizzling market. KKR & Co., My Community Homes, American Homes for Rent, and Amherst Homes are among those that have slowed acquisitions of homes in recent weeks. And then a company called Mind Management, MYND, states it, which helps institutional and retail investors buy and manage properties, has been advising clients to slow acquisitions and wait for home prices to adjust to rates. So obviously we're seeing a lot of different institutional investors, small and large. They're all on the same page right now. They realize that, they're not going to be as profitable if mortgage rates continue to increase, and obviously where property values remain at an elevated price. So everybody is just standing still, just waiting for sellers to get more and more realistic. And in a short period of time, we are seeing the market turn and flip. And, unfortunately, there's going to be some people stuck with the bag who bought at the peak of the market. And I think that we're going to see a lot of people be over leveraged. And, the cost of everything going on right now, guys, from food to fuel, I think it's, despite people having low mortgage rates, locked into low mortgage rates, I think that we're going to see just a lot of people start listing their properties because they're just not going to be able to afford that high mortgage amount regardless of the rate, as well as everything associated with home ownership, including utility bills. So we're hearing a lot of that in our local market of people's utility bills just doubling in price. and a lot of people are squeezed right now. So I anticipate we're going to see more and more inventory come to market. We're going to see properties sit on the market longer. We're already seeing that, and we're going to see more and more inventory just have significant price reductions, and we're seeing it daily. So it's a wild ride right now, and the biggest thing that we're trying to practice is patience. It's tough to even look at properties where, I pull up comparables, and pre-pandemic, they're still double the price in Southwest Florida than pre-pandemic. So I just can't get myself to even come close to these asking prices right now. So I'm like these guys as well. I'm sitting on the sidelines in most cases. Doesn't prevent me from looking at real estate and looking at other opportunities, but prices have to come down significantly for us to get back in. Anyway, let me know what you guys are thinking, what you're seeing in your local market, and I appreciate you guys being with me here today. See ya.